I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's
Really?
gone up. I mean, look at it. It is. We're creating now a market that has more liquidity, more transparency, and I'm pleasantly surprised, and I would never have predicted it before we filed it, that we were going to see this type of retail demand.
So you thought you'd do good, but not this good.
I thought, yes.
Well, IBIT is your ETF over at iShares.
Yes.
It's about to overtake Grayscale, which was in the business certainly a lot longer. You look at the gains since January 11th when it first came about.
Yes.
Have you ever seen this much inflow this quickly into
IBIT is the fastest growing ETF in the history of ETFs.
So what's that path like to 150? Because I know that last summer you had called for a blow-off top in 2024, and we haven't seen that. Is that still to come before we get to that 150?
So the big move happens post-halving. So the halving occurs sometime between April 20th and April 21st, most likely. So once that occurs, then you start to get an increase in demand, right, from the ETFs and other people interested. But the supply of new coins goes from 900 a day to 450. Well, think about it. If there's more demand than supply, price has to rise. So the price starts to rise. It starts to become more exponential or parabolic toward the end of the year. And historically, about 9 months after the halving, so sometime toward Thanksgiving, Christmas, we see the peak in price before the next bear market.
Tokens markup, I'm curious, do you just buy and hold, hodl, or do you actually trade around the position?
Melissa. And we're a venture capital firm, Morgan Creek Digital, so we're not a trading fund. So we do buy and hold or hodl, but we will sell on occasion. We sold a bunch of our Solana 2 years ago when they ran into problems with the network. We sold about 2/3 of it. Thankfully, we didn't sell all because it's done well. We sold about 3/4 of our Coinbase stock when it went public. And now we hold about 1/4 of it. And we think big things are in line for Coinbase. That's one I forgot to mention. We do like Coinbase a lot. So we do hold mostly as opposed to trade. Great question. So we look at the fair value today from the Metcalfe's Law model. That gives us round numbers around 50,000. The halving occurs in 3 weeks. What a halving does, it cuts the block rewards, the amount of money that's given to the miners to secure the network. If those rewards were to get cut in half, as they do, many of the miners would struggle. So historically, what has happened, the price rises, the fair value rises. So that would push it at 100. But this time it's a little different in that instead of just block rewards, we get transaction fees because of ordinals and inscriptions. So let's say the fair value only goes to 75 this time. Then post-halving, you get a lot of interest in the asset, a lot of people FOMO in, and we normally go to about 2 times fair value in the cycle. So in the last cycle, fair value was 30. We got as high as 68, 69. This time, I think probably 2 times because there's less leverage. So that gets us to 150. Because the regulatory regime has been pretty restrictive. I mean, there are the mining companies that secure the network. They've had a really good run, so the valuations are a little toppy, but we do like those businesses. There are component companies that make the machines that secure the network. AMD and NVIDIA have been a story, a proxy to play the crypto markets for about 6 or 7 years. But again, they're at valuation levels that are tough to stomach. There are a lot of really interesting products and new tokens in the private markets. That's where we traffic at Morgan Creek Digital. 80% of what we invest in are private companies, and only about 20% are in the liquid tokens. But we like things like Ethereum, we do like Solana, we do like Avalanche, and you can go down a little bit lower on the capitalization scale. Bitcoin's the king. It is the dominant token. It is a better form of gold or digital property now, as Michael Saylor calls it. So I do think it will be the best, but the law of large numbers comes in. I think it could go up 10x from here easily over the next decade, but I think some of the smaller projects will go up orders of magnitude more, just the law of small numbers.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And we have Mark Yusko on CNBC speaking about his predictions. And guys, we know the only thing we have to do is follow the Fed. Every pump we've seen in Bitcoin and crypto or stocks has come from the Fed. Now, we know the Fed is going to be shrinking liquidity, but Jerome Powell stated they're going to slow it down. So, guys, we're going to see a slow creep down until we get that crisis. And we can clearly see that crisis is right around the corner. Remember, they need a big enough distraction in order to build the fourth industrial revolution. And then, guys, we have Mike Novogratz. And he's a Goldman Sachs guy, and he's also in charge of that FTX fund. And we know the bank man gets sentenced tomorrow, and guess what? Nobody's looking. Now, Novogratz speaks about all the debt and all the inflation that we have in the economy. And guys, again, the only thing we have to do is go back to the Fed. They printed all this money in order to fight the crisis and then turned around and raised rates in order to fight the inflation that they caused. Remember, problem, reaction, solution. And Mike Novogratz says he doesn't see us to stop spending. We're definitely going to stop spending. He knows all about the fourth industrial revolution. Next year, once we get a president in office, we're definitely going to stop spending all this money. And that's the reason why I tell you to enjoy this year, because there's going to be a lot of crisis next year. Because remember, we're in a fragmented world. They have to destroy everything in order for the fourth industrial revolution to rise. And we have Blackrock's Larry Fink. The Bitcoin ETF is the fastest growing ETF. Come on, guys. We see it in Grayscale. Grayscale outflows almost match the same as the inflows in Blackrock. And Grayscale, only thing they had to do was lower their fees. Remember, guys, you're in a simulation. There's a plan. It moves in phases. And speaking of simulation and plan, we have Biden and Yellen disagreeing on who's going to pay for this bridge. And we have Yellen wearing that purple and pearls. And that should tell you everything. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Yeah, listen, Bitcoin has broadly doubled since November. So let's hold this in context, right? We had a $35,000, dollar price 5 months ago, and we're now 70,000. And so it's been a monster rally. That rally was mostly fueled by adoption, right? With the ETF, it made it very easy for people in the U.S., institutions and the wealth channel, most importantly, to access Bitcoin for the first time. What's happening at the same time this is happening in the U.S., we're launching ETFs with DWS in Europe. We've got a partnership with Itaú in Brazil, and you're seeing people around the world participating in the simpler form of Bitcoin, right? An easier access form. And so I think this is just starting. Like, what will happen to prices? Prices are going to consolidate for a while between 75 and maybe 62 or even 58. You could see a consolidation, but each 100 days our government's adding $1 trillion of debt. Right, we're at 34 trillion right now. We'll be at 35 trillion, and then 40 trillion. That story is so powerful. It makes it easy for salespeople, right, for registered investment advisors to tell their clients, put a couple percent of your net worth in Bitcoin, and you're seeing that happening. This is a process that's going to go for years, not for months. Listen, you could have bought a house in America in 2012 for $190,000, and today that number's about $400,000. Right? And so when you print as many dollars as we're printing, forget what the headline inflation number looks at, because you have asset inflation that doesn't go into CPI. At times you have food inflation. And so you have lots of different inflations. The purchasing power of the underlying currency goes down, right? Look how much silver a British pound gets you today. Certainly does not get you a pound of silver. The long-term history of governments is that they debase their currencies, and we're in that process. And we've got an election coming up between Biden and Trump, both who I think will expand the balance sheet. We're running 25% of GDP as a federal budget. That number should be 20. So we're 5% of GDP off of where a real good, tight government would be spending. And I just don't see that changing, right? Populism is taking over the world. It's a very scary world in that respect. But Trump is a populist and Biden is a populist. We don't have a centrist in the system. And so I'm really skeptical that we're going to have a Simpson-Bowles amendment or something to balance the budget or someone to cut spending. And until that happens, it's easy to sell Bitcoin. Well, it feels very different than it did 6 months ago, right? Our phones are ringing off the hook. We've gotten into the staking business. We'll have over $1 billion, $1.5 billion staked, which wasn't 6 months ago. We were barely in that business. That's part of our infrastructure part. Our mining, we're mining coins cheaper than anyone else, any public company and any private company I can see, because we're so well situated in Texas. So our mining business is doing well. Our derivative business is booming. Lending is picking up. People are lending us money at much cheaper rates than they used to lend us money. And institutional partners are reaching out and looking at how can we work together. And so when I look at it all together, it just feels like a different business than it did 6 months ago. We made money. We own a lot of assets. Assets went up. Our businesses made money. Our operating businesses are running profitable. And so could it be more exciting?
It's my intention that the federal government will pay for the entire cost of reconstructing that bridge. And I expect the Congress to support my effort. This is going to take some time. The people of Baltimore can count on us, though, to stick with them at every step of the way.
You said the federal government's also going to pay for the repairs. I'm just curious, this was a ship that appears to be at fault. Is there any reason to believe that the company behind the ship should be held responsible? And then also, you mentioned...
That could be, but we're not going to wait for that to happen. We're going to pay for it to get the bridge rebuilt and open.
You need appropriations for the taxpayers be on the hook.
I'm not sure what the details are. We have money from the bipartisan infrastructure law that could potentially be helpful. My expectation would be that ultimately there'll be insurance payments in part to cover this.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong,
it could be a tool to enslave humanity, and if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold. I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
very much a traditionalist. I like staying with the dollar. You know that from when I was there. It's make the dollar the choice. I hate when countries go off the dollar. I would not allow countries to go off the dollar, because when we lose that standard, that will be like losing a revolutionary war. That will be a hit to our country, just like losing a war. And we can't let that happen. And too many countries now are fighting to get off the dollar. And
Cryptoteacher and the New World Order book, plus the 3 Kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID 33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.